The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, a lot of times when we kick off a new month, we can tend to see new money flow into the markets. There's always that added degree of a little bit of volatility around the end and beginning of a new month of trade. Yet we kicked off December with very quiet action, I would say. A little pressure at soy. Corn and wheat relatively flat, some profit taking maybe in feeder cattle. All in all, not a lot of fresh news to start the month of December. Joining us for market analysis, let's talk about it. John Heimberg with Total Farm Marketing. John, good to catch up with you. Hope you had a awesome Thanksgiving and holiday weekend. And, here we are. We come into Monday's trade action, and I'm searching for fresh news and not finding a whole lot of it, John.
Yeah, it's pretty quiet on the news front, that's for sure. And kind of the way November ended was that same route. You'll sit there looking for really something that's going to trigger this market on a daily basis. And, it's just not there. Other than, we still got some good demand news out there for both corn and soybeans. Got a little more demand for beans again today. And, those types of things are out there. But really anything that's just going to make this market want to bring premium in or really even take the value out is just kind of missing at this standpoint. So with that, you get a corn market that just kind of continues to grind in a sideways fashion. You got a bean market that still just looks at these large supply of Brazilian beans coming at us. And, there, at least we're holding support, but it just sure feels like that market's on a slippery slope right now, that it may want to take a break here and tumble. So that's really kind of where we're at this time frame. Not a lot of things in front of us between now and the end of the year. So we'll kind of see how these markets kind of play out here in this basically, last 20 days or so of trade.
Well, thinking about South American weather, particularly on the soy complex, weather remains favorable there. It's a bearish factor for our markets. And I know a lot of private estimates are updating here, looking at the size of the South American soybean crop, Brazil, Argentina. Some estimates are for Brazil are getting into the low 170s, et cetera. So, talk about just this aspect here of a big crop, it appears on tap, and how that's really going to drive our soybean markets, barring something unforeseen here through the holiday season, John.
Yeah, that's really the wet blanket in the soybean market right now, as well as just what's happening with the products and the oil and the meal side of it. Again, reflecting maybe a larger supply coming down the pipeline, just really making it very hard for the bean futures to get any traction in that regard. So, obviously the weather is going to be the focus. Do we get some type of a weather rally? But I'm looking at forecasts through the end of December, staying very, very friendly for crop development. There's even some talk today that some areas are getting a little too wet. Maybe you got some concerns regarding Asian rust down the road. But again, you understand how big Brazil is in terms of the soybean producing continent. We got those latest planting results here today. We're talking about 91% planted. So, there's still 9% of the bean crop that's not even in the ground yet, just because of the range and the size of that country and how long the season really is for planting soybeans. So, right now, at least just everything we're hearing in those key producing states, forecasts are staying wet. Moisture is there. And the conditions are very, very favorable for this crop to get a great start. And the market's starting to show that. We continue to see weakness in those springtime as well as into next year in the back half of these futures contracts, just reflection the competition that we're going to be seeing as these Brazil beans come on board at this time frame. And just the thought process, that this market is going to kind of shut the door here in terms of U.S. demand here after probably the 1st of February.
Well, and to that end, not just supply, but the currency factor, the price factor here. Let's talk about that a little bit broadly across the grains. When you think about that competition, and we saw the dollar higher again on Monday, getting back up near that 107 level. I know that was something that equity trade, you were watching that in terms of kind of a wet blanket on our grain markets across the board as well on Monday, John.
Yeah, and it will continue to be. Again, just doesn't help line up into us in terms of competition and with some of these global traders and going forward. And then you go look at some of the individual currencies where the Brazilian real is versus the US dollar, basically trading at all-time lows versus the dollar in terms of that conversion rate. So those are things that realistically put that Brazilian crop as well as that Argentina crop just a little bit more on sale. And that's going to be something that's going to weigh on things going forward, is that continued trend in the dollar index. Like you said, we had a bit of a choppy week last week. Some of that was really tied to maybe the breakdown of the dollar yen spread and the trade that was going on there. With the Bank of Japan talking about raising interest rates, and we saw that spread quickly flip from long dollars, short yen, to getting long yen, short dollars. And I think that was probably the volatility that we saw. Now that that's kind of stabilized, there's still some forecasts that we're going to see this dollar continue to climb and get back up into the low teens levels that we haven't seen here in multiple years, just given the confidence and the strength that we think the dollar is going to have as we move into the new administration.
Well, and to that point, I'll take us down this rabbit hole real quick, and I'll try to frame this up the best I can. I talked about tariffs quite a bit on this show. A lot of folks have been talking about tariffs. We saw more news over the weekend, comments from President-elect Trump that if China and other BRICS countries were to, say, create a new currency to try to supplant the U.S. dollar, we could see 100% tariff on those countries' products coming into the U.S. So things like that are continuing to be talked about amongst folks in ag throughout the trade. But I wonder, in terms of a grain and livestock market perspective here, John, how much is this trade rhetoric getting factored in? Is it not at all? Has it already been factored in? I mean, what's your thoughts on some of that in terms of the current market impacts?
No, I do think it's a big factor, especially in the grain side right now, at least in terms of market sentiment that, hey, we're going to have ourselves a difficult situation. Tariffs are coming, could weaken the demand. The biggest concern is what's going to happen on the retaliation side. Obviously we had the conversations about the tariffs with Canada and Mexico over the last week. Again, the announcements, again, what we're looking at with China in terms of its tariffs. Where does this all come into play? One thing on China, they have tariffs or import taxes set up on U.S. beans, but they currently waive those right now for their exporters. So there's no tax going out. So it wouldn't be very, very difficult for them to say, all right, we're going to reinstill those taxes, just kind of like that announcement we saw with used cooking oil a few weeks back when they said they're going to bring those taxes back on. Again, maybe changing the playing field there. So there's just a lot of variables. I think that's the biggest fear of the market. We know the tariffs are coming. We know there's going to be some issues regarding trade going on. That's just going to be the way it's going to be. I think the market's accepted that fact. The concern is what is going to be the retaliation. We had a very large set of purchases for soybeans on Friday, kind of like the biggest one for a long time, with nearly 900,000 or a little over 900,000 metric tons. Again, who was that to? We don't know. It was unknown destinations. But, could that have been a signal? Maybe that's the end of the buying program for the most part, at this time frame. Or is that a set of bushels that things don't go well, quickly get canceled somewhere down the line? Those are the unknowns in the marketplace that for both corn and soybeans. We do have this pile of unknown destination sales out there for corn. Everything I've been hearing from listening to other analysts, it is not China, it's somebody else in the marketplace. But do those sales get it to the finish line? And those are some concerns here. Maybe that's a little bit of the reason why the USDA has been very slow, at least in terms of moving that corn demand side around, just because of that unknown. They don't want to go ahead and make a demand increase, add 100 million to the export pile, all of some poof that disappears because of some cancellations, and then they got to pull those numbers back. To me, that's even more damaging to a market's mentality than this current, where we got good demand, but we're still keeping numbers status quo, and the market's already tried to price in maybe some different levels. I truly don't think the corn market's pricing a 1.94 billion bushel carryover. I think it's more in a 1.85 in just how it's acting here because of that demand pace.
Do producers need to rethink their risk management strategy, especially here as we're kind of getting into the holiday malaise? Markets are a bit quieter, less volatile, but ahead of the incoming administration, do we need to rethink some of our risk management strategy and grains in particular?
It's very difficult right now. Just talking to a few guys, there's not a lot of meat on the bone as we go into 25. Here, 430 on December corn, obviously pushing $10, sub $10. Today again on November 25 beans, at least still held that psychological level. You start putting the pencil to that, it doesn't quite work with some of the input costs that we're going to have out there. Again, answering your question, though, yeah, producers really need to be very fine tuned in what their bottom line is going to be, and when the opportunity is there, they got to either make the sale, protect it, start getting plans for how things are going to work out. Again, hopefully we don't have a situation like last year, where last year I look at like March corn, talking to producers today, we had a nice little rally after first notice day. Maybe we're in the middle of that right now for that March contract. Then we peaked out about the 6th of December, and that was the high for March corn basically until expiration. And actually we started 2024 with a heavy selling pressure. We lost over 60 cents from the first of the year to that February low. Obviously prices were a little more elevated then, so maybe the percentages aren't going to be the same, but that's just something that's a concern to me for producers out there. When we get past the first of the year, guys are going to have to probably move some bushels, and that's going to be interesting to see how this market handles that. Where's that supply at? Is it locked up in bins? Maybe it's not out there. I've been questioning maybe last year's supply isn't quite out there yet with the dry weather we had in 23. And then this market is still trying to find that hole. The question that we have in a lot of these markets right now is, why are the spreads acting the way they are? Why has the cash market acted the way it's had? We had first notice day in December was only 7, 8, 9 cents over the March, or under the March, which is pretty thin in terms of that carry. Typically we want that 15, 16 window. So really put a lot of different marketing opportunities out there for producers. So getting back to your final point on that question, producers just got to look for that value, understand where it is, and protect it at all costs. Because over the next 12 months, if the weather is good, we got to always assume weather is good. Could we get a bump in corn acres because of the lack of bean prices out there? What happens in South America's crop? Do they put more corn acres in than anticipated? That could come into play next summer. I'm a little scared in the back of my mind that the issues we're dealing with in the soybean market might come to light in the corn market with a big global picture and U.S. picture next year.
John, how about over in the livestock trade? Let's start in cattle. I felt like feeders especially, it was some profit taking to start the month of December on Monday, and that kind of spilled into live cattle as well. You mentioned this to me off air. We kind of hit some topside targets, some resistance points, things of that nature. What's your perspective on this cattle market to start off the week?
We got to see where things go after today. Obviously, we got some reversals, especially that feeder cattle market today. Tried to get through the 260 barrier, rolled off that fairly aggressively, finishing well off that high, still down $2, pushing $3 here into those early months in the winter. So now here I've got a chart that's had a really nice rally, steady all the way up through November till now, with a big bearish reversal on the top side. So to me, that brings some technical selling into the marketplace. So we'll see if we get some follow through on that, or is this going to be a consolidation point here? But yeah, you go look at some of these longer term charts, that 260 window on that January or that March contract, that's a pretty big barrier to get through. And we failed at it pretty aggressively today. So that maybe tells me the upside might be done for a moment here, but we'll have to be cautious of it. Again, I use the term cautiously bearish is kind of always my speak in cattle market. I just feel like, hey, we're getting up here that I'm not sure this wants to go through. I want to protect value, but at the same time, I don't have anything in front of me that this thing does kick it back in, that we're chewing on it. I want those cattle to be able to be priced higher. Same thing on the live cattle side. We had a reversal last week on that front end contract in February. Another outside day reversal today, kind of rejecting a chance to run back up. Now we got some moving average support, but wouldn't surprise me we see some money flow out of that market, contradicting the cash market, which was strong last week. 190 cash, that's going to help support that December contract. That'll keep a little premium in the Feb. I still think cash is going to wind up being king, but right now I'm just getting some signals that maybe that 190 level on that February contract, which we poked at today, is just going to be a pretty hard barrier to get through. And if I'm a producer, I better get a floor underneath here, make sure I keep it fixed risk, and leave that upside open if this market wants to rally.
Hogs on the opposite end of the spectrum, futures found some good support to kick off the month. Triple-digit gains. Any big notes for you in the pork numbers on Monday, John?
Really today, that February contract, the most actively traded, is the focus here now. And that was just an inside day. In other words, we traded within Friday's range from high to low, and we just finished higher. So it was a consolidation day. So we'll have to see. Commitment of traders comes out this afternoon, delayed because of the Thanksgiving Day holiday. Where are the funds at? They were well into a record long position on the hog side. We got a big reversal on the charts on Thursday last week, follow through on Friday, little correction back today. Right now, I would say the path of least resistance, at least in that hog market, looks like it wants to correct here, and see some profit taking off of this position, which, if you think about it, really the February hog contract hasn't had much of a correction since we started kicking in August. That it might be due here, especially with the funds and the positioning where they are in the end of the year, just right around the corner. So that's, makes me cautious, makes me bearish. At the same time, if I was a producer, there's good value there. Make sure we're locking that in. But again, at the same time, it's the cattle market, it's the hog market. There's always a chance for money that wants to push this higher if the fundamentals are still there.
About the dairy trade, John, just any quick notes there as you're watching that market to kick off the month?
We need to see some stabilization in that cheese market. Now, find maybe a little bit of a technical bottom here in those futures for that milk class 3 milk. But again, cheese trade at 160, down another small amount today on that block side, barrels unchanged. Until we really get some footing there, and I'm kind of surprised because it's typically a window we see some decent cheese demand, but right now that market is really struggling, and that in turn is just going to make it difficult for this milk market to rally. Really cautious if we get any strength whatsoever into that 25-year. That's got to be a window that needs to be looked at, just for producers to put some floor in.
Any final thoughts? Anything else you'd reiterate to folks here today on the show, John?
Again, markets are going to be choppy. They're going to look for news. We could have good days. We could have bad days. Again, as you're starting to look at that 25 picture, get the budgets together, just know your targets well. And when you got the opportunity to protect value, make sure you get that in. And if there's value out there, like we see in cattle and hogs right now, make sure we're taking advantage of it, to some extent, because again, those markets really can move very, very quickly on money flow over the fundamentals if they got a reason to.
John, if folks want to reach out to you there at Total Farm Marketing, have a conversation, I know a few ways to get in touch. How can they reach you?
Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget that website of ours, totalfarmmarketing.com.
Always good to chat. John Heinberg, Total Farm Marketing. Thanks for joining us on Market Talk today. Have a great week. We'll talk to you next week.
Sounds good. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkegg and hit the subscribe button, or you can search for Market Talk Egg on YouTube.